Hello, everybody. Welcome to Canadian Mortgage Hangout TV. My name is Gordon McCallum, and I'm with some gentlemen from around the country. We haven't yet convinced any of the female members of our industry to join us on TV. Maybe they'd be too embarrassed or something by hanging out with us, but who knows? To my immediate right, I got Jackson Middleton from Regina. Say hey.
Hey, guys.
And Rob Campbell out in Guelph. What's up, Rob?
Hello, everybody.
Scott Dawson in Vancouver, and we're joined today for the first time by Conrad DeJong, who hasn't had time to get his nameplate thing installed, so you're just gonna have to remember that. Welcome, Conrad. Thanks for your contribution last week.
Thank you.
Good to hear from you. So, guys, there's some interesting stuff in the news the last few days here. I've noticed some things that are kind of contrary to the theme that the media has been playing out about consumer debt. I read here that Equifax has just came out with a report saying that Canadians are making real strides in cutting their household debt, and they were doing that before the mortgage rules came into effect. So kind of along the theme that some of us in the industry have been talking about, which is did the government overreact? Is this going to, is it a bit of a heavy-handed kind of implementation when the real estate market and a lot of markets were already cooling off, and Canadians were already making strides in their meeting their debt obligations? What do you think, Jackson? Any thoughts from you in Regina? Are you seeing this? Are your applicants coming in with lower, better credit ratings and lower consumer debt?
You know what? Credit ratings doesn't seem to be a problem. I think people are managing their credit well. It's just, if I'm being honest, my primary demographic is first-time home buyers, and I'm seeing first-time home buyers coming in with a car loan, a credit card with a balance, and a line of credit with a small balance. You know, the client that comes in with no debt and money saved up in the bank ready to go, from what I'm telling, is few and far between. Now, you do get some, but everyone seems to carry and manage a certain amount of debt. Now, has it been enough time since the rule changes? If I've seen anything recently, I don't think it's been a long enough time for me to really make a good comment there. But I'm saying credit scores are good, but it's just, no, I don't see evidence of that firsthand.
Okay. Anybody else care to comment? Are we seeing a reduction in some of the consumer debt people are carrying prior to applying for a mortgage? Or Rob, Oh, Conrad, go ahead.
I think we're starting to see a bit of a mind shift, with how people view debt, and I think some of that is starting to reflect in what some of these reports are coming out. And I'm noticing it just even in conversation with just my circle of friends, and I think the consciousness around debt and trying to get out of debt, or I'm not buying that, and there's more consciousness around it, whereas I think people were kind of unconscious around it all for quite a few years, and I think that's slowly shifting. Some people are not getting it, but I think there is a bit of a trend towards that way, and what I'm seeing even in casual conversation.
So I guess that would lead us to a trend of better applicants over the long term, I suppose. If the trend goes in that direction, it'll be interesting to see what that does to the overall economy. When one of the long-term deleveraging is probably a good thing. It gives people more disposable income and more ability to manage their finances. But in the short term, I guess if people are plowing any excess cash they have against their debt obligations, then they're also not out buying, and that can slow things down. Would you agree with that, Rob?
Yeah, I agree. I mean, to add to what Jackson had to say, my demographic lately has been a lot of first-time buyers as well. So not a lot of opportunity for them to acquire or amass a whole bunch of debt. But I wouldn't say that I've noticed any kind of trend per se due to the changes that are happening. I mean, we as we've covered in past weeks here on our webinars, it's the sign of the times that people are carrying debt and they're trying to manage it as best as they can. But I don't see any crazy influx in it at all.
Scott, are you a golfer, Scott?
I'm a golfer.
Scott, I'm wondering if there's I think we need to invent a new way of measuring economic prosperity or economic freedom. I think the golf course index is probably a new measure I'm going to come up with. You heard it here first, so I'm keeping it. But are there more or fewer people on the golf courses out your neck of the woods right now?
You know what, you say that. I think they've had, and I'm good friends with a fellow I met on Twitter, Jeff Seco. He does a lot of management for golf courses, a lot of their social media strategies, budgeting, that kind of stuff. Locally, yeah, I believe it has been down. I mean, a big thing, partly too, was last year was with the Canucks, obviously making to the finals. That emptied the golf courses out too. But yeah, it's quiet. It's obviously, yeah, people are looking at their discretionary spending, right? They're cutting back on these luxuries. So of course, whether it's golf or buying that new car, it's going to be something that they're cutting back on to save money somehow.
Well, you're right. I think the Canucks run definitely took a lot of people off the golf course, but you could still see they needed that physical outlet for their rage. That golf tends to bring out the worst in people. They didn't have that outlet anymore, and they were still swinging clubs, but just at inanimate objects.
And wrong. No comment.
Right. Now, I'm wondering about if what happens if things swing too far. Now, I don't know that this is going to happen. I think this is going to be a good thing long term. I'm just wondering about in the short term. Is there enough uncertainty out there, or are people do they understand the rule changes? Are they going to be happy with them and just committed to? Are we going to see average loan amounts decrease, for example, or is it just health?
And somebody just exploded, but that's okay.
Go ahead and take your call, Scott.
No worries.
Say hi to your mom for us.
Yeah, just mute that puppy. We're good.
You're gonna laugh at me. I have a landline fax machine.
What is that?
What's a fax machine?
Well, what's a fax? Is that a facsimile?
Wow.
Does it use that roll of waxy paper?
Oh yeah, that's old school, baby.
Totally sidetracking here, but I have an e-fax, yes. But from time to time, certain, for whatever reason, numbers don't get received on it, and clients have to fax me old school.
Do you get all your clients to sign in triplicate on your carbon paper as well? Or?
Nice.
Is that a pigeon pecking at the window behind you, a messenger pigeon?
Yes. If all else fails.
All right. Okay. Now, while we're on that subject, this would probably be a good time to bring up sponsorship. We at Canadian Mortgage Hangout.tv, I think the next phase in the development of this program is to get some sponsors on board, and maybe eFax or TELUS or somebody.
Yeah, there you go.
Help Scott out with his predicament.
I'd like that. Come on.
That's awesome.
I like the sponsorship world. As you can see, I'm sponsored by Nike and First National.
Starbucks. Let's go with Starbucks.
And it's because, well, the main reason is most people take 9 holes or more to hit par. I can get to that number in 5 or 6 holes, no problem. So. Now, guys, there's another interesting piece of news today about bank dissatisfaction benefiting mortgage brokers. This was a study according to J.D. Power and Associates about Canadian retail banking customer satisfaction, and it said the number of people who would advocate for their bank declined by 5 percentage points. And customer loyalty went down by 4 percentage points compared to 2011. That's a fairly substantial drop. What do you think is leading to that? And let me ask it in another way. What do you think is leading to that, and how do we exploit it or take advantage of it? Maybe exploit is the wrong word. How do we capitalize on the opportunity that presents us? Conrad, you look like you're ready to jump through the screen here. Go ahead.
You know, in one sense, I'm seeing that trend, and then I'm also seeing where I've had a couple of clients requesting that they be put with a lender that has branch support because they feel like they are in no man's land with these monoline lenders, like, you know, the INGs, First Nationals, and feel like they're not getting what they need, that they can't get from me, and that they need, when they need that actual lender support, they feel they're just not getting it there and don't have the opportunity to, you know, dive into some more products if they need them. So I think it's the same old adage, though, is that, you know, the banks are huge. They've got so many clients, and I think there's only so much that one person can do. So if you get a really great rep in the bank, then you can have a great experience. But if that person's really good, typically they'll get moved along the chain. They'll get moved up, and then they're typically gone from, you know, servicing that group of people that they've been servicing, and those people love that person, but that person's now gone. So then they start out with a new guy and not getting the same experience. So that, and then the relationship is lost.
So it's more of a personal relationship than a brand relationship in that scenario. Is that would you guys agree with that, Rob? Is that something you find is consistent out east?
Yeah, I'd say so. I mean, you know, it's like Conrad said it. He hit it right on the head of the nail. That, you know, people want a face-to-face experience with somebody, and when they establish that relationship, in a year when they go in to ask a question or book an appointment, that person's gone, which is, it's typical. I mean, they move around from branch to branch. Then there's not, you know, there isn't that relationship anymore. So, you know, if clients are wanting that branch experience, but you know, it goes without really being said that with using a broker, it doesn't matter really what franchise or company a broker goes with, so long as they're, you know, they keep the same number in office and all that good stuff. You'll always have that relationship throughout the life of being a homeowner and holding a mortgage. So yeah.
I was also reading another article. Somebody, another mortgage broker, actually tweeted me this morning. Rob Carrick kind of sent it out. Was talking about how the branch visits are actually going down. Right? I mean, most people are doing them. I mean, I do most of my banking on my phone. People aren't going to the branches, right? So I mean, they're probably equating. A lot of times, the only time you're going to go to the branch is if you have a problem, right? You don't usually. You can't solve it on your phone or on the internet. You have to go and actually talk to somebody. So that I could see the dissatisfaction there for sure. And also, I mean, the benefit for us is there actually is less visits needed to go to a branch. A lot of clients I deal with, talking about, you know, lenders with branches, TD Canada Trust, Scotia having their branch fulfillment mortgages. A lot of people don't want that hassle. I mean, they go to a broker to save themselves having to do that, make an appointment, go into the branch. So it's a benefit to us.
I would imagine as more and more fulfillment's happening online, or more and more people are searching online for a mortgage provider too, that they may be more and more willing to do everything over the phone and an email as opposed to going and visiting you. So I know that's been our experience.
Well, I'm going to agree with you there, Gord. I'm going to try and tackle a bit of the second half of your question. How do we exploit this to our benefit? Of course, try and make it a little bit softer terms. But I mean, honestly, the thing is my beef really isn't with people going in and dealing with the bank. If you've got a great relationship with your banker and your banker's taking care of you and they're giving you, you know, great service, great terms, great product, great rate, continue dealing with your banker. It's the people that, you know, the dad says to the kid, oh, you have to deal with RBC because we've always dealt with RBC, and then you go in there and they blindly give them posted rate when, you know, we could save them, you know, we could tell them how the process works, probably get them into a term that fits their life better and lower the rate all at the same time. I mean, I think the service that we have to offer as a broker is just considerably better than what the bank can offer. So how do we use this? Well, I think if the market is softening for the banks and people, if you really read into what the study said, it was, are people likely to refer a friend, strongly refer a friend to the bank? Well, if that number is dropping, that means that we have an opportunity to create relationships with people, become their center of influence, and have them refer their friends to us.
That's actually a good point. There's a book called The Ultimate Question, and it's the third, I think, in a series. It goes back to the loyalty effect and loyalty rules, and then The Ultimate Question is, I think, the third book by this guy named Fred Reichheld, and it talks about that. And basically, you can boil down all customer satisfaction metrics, and even the surveys you send out can only be one. If you did one question, the key question is, how likely on a scale of 1 to 10 are you to refer me to a friend or family member? And if that's an 8 or up, you're good. If it's anything below an 8, you're not going to get a referral, and it has a lot to do with that. But loyalty is one of those funny things too, where we try to understand it sometimes logically, and we talk about it this way, but really, isn't it an emotional thing? And that emotional inertia, I think you can call it, where people choose their provider sometimes for irrational reasons, or they may have had a negative experience a number of times, but emotionally they're still linked. It's almost I'm sure people in abusive relationships go through this too, but it's obviously not that severe, and I don't want to make light of that, but there are people out there who think that their bank has always been good to them, when in fact they haven't always been good to them, and you can show them the numbers to prove that, but emotionally they still feel that. We had an experience the other day with a client. This was actually in the insurance side. We had in our insurance brokerage, and we had these. The client's insurance company turned him down for insurance because the property had 60 amp electrical, and we were able to find, through our insurance brokerage, we were able to find a carrier who would provide him coverage, despite the fact that it was 60 amp electrical, as long as the work was booked to upgrade it. And so he took that, but he was willing to take the insurance coverage from our brokerage only for 2 or 3 months until the electrical was upgraded, and then he was going to go back to the previous carrier who wouldn't help him in the first place. And we're like they didn't help you. They were not willing to help you. They were not willing to step up to the plate for you. They basically told you they didn't want your business. And here we are with a solution. We've solved for you your problem, and we still couldn't get more than 2 or 3 months of loyalty out of the guy. So how do you explain that sort of thing?
Well, I think for a lot of people, it comes to we can talk about our industry as mortgage brokers. It comes to perception of our industry. I think that's a lot of reason. I mean, a lot of people think they're a big bank, it's a big brand, it's a big marketing machine behind them, and they must be good, right? Speaking with our industry, obviously there's individuals in our industry that give, like any other industry, right, give it a bad name, and I think that's something as brokers we can work to rise above, right? And it's something that we're doing here, but that's one, I think, challenge that we have.
Okay. Well, I mean, let me just jump in here. I mean, even the fact that we've got 5 mortgage brokers, I mean, 2 of which are in the same marketplace, and here we're sitting here talking, I guess on the outset you'd look at us and you'd think that we're competitors. Well, you can look at it that way, but that's not really the way it is. I mean, if we all do good business and we all service our clients, regardless of what market we're in, the broker market share across Canada, I mean, the last stats I heard was about 25% of market share. So the banks own 75 with their mobile mortgage forces that they're developing and stuff. So we got 25, they've got 75. Would the broker channel be equivalent to one of the big banks? I mean, I don't know the numbers. I haven't studied it. But rather than marketing ourselves and trying to brand ourselves as individuals, what if as a broker channel we marketed our profession and our industry? We could compete at that point. But right now, if it's any one of us going up against a big bank, of course they're going to win. I mean, like what Scott said, they've got this recognition that's out there. I think as a broker channel, we need to work better together.
Branding's definitely an issue. Go ahead, Rob.
Yeah, I was just going to say, that came up. I think that came up as a hot topic earlier this year, or maybe late last year with Camp. There was discussion about maybe collectively across the industry taking 1 BIP off of every deal and putting it into a bucket, and then taking that allotted funds and doing a national advertisement campaign, the argument that's a pro. The argument there is, well, we pay camp fees already. Why the heck isn't it already being done? So I agree with Jackson. I think collectively, obviously, we're colleagues in arms, but we are independent business people as well, and it is a competitive market out there. But collectively, as a whole, I agree with Jackson. I think we need to collectively as an industry step it up a notch and let people know what we do. So that's my 2 cents.
Any other comments on branding, guys? I know each of the national brokerages takes a little bit of a different approach, and I think one of the things the bigger brokerages may have to do is look for ways to get economies of scale out of their. What was that, a bee?
There's a plane or something going by, and it's not in my world, so.
Okay.
Here.
I think if brokerages demanded a little bit more out of their agents, perhaps, this is an unpopular opinion, I know, but what good does having 300 agents across the country or 400 agents across the country do for the industry or do for that company if there's no mechanism to capture any of that scale from a marketing standpoint, right? Because you may have 300 or 400 different agents running around. They've each got their own marketing campaigns. They've each got their own different approach to obtaining business. In a lot of cases, they're competing with each other online or things like that. If there was, taking advantage of that scale seems like probably the only way to mount any kind of marketing campaign that would rival what the Big Five are capable of. Would you agree?
Yeah.
Yeah, I agree. I mean, I agree. Collectively, it's so hard, right? Because what can you do other than on a national scale put up, camp.org and get people to go there and look locally for a broker to use? I mean, there's so many options. It is really a kind of a touchy subject. We're all trying to brand ourselves in our own business and our own brokerages in our own respective markets. So how do you do that nationally? Yeah, it's a good question.
Yeah. Well, I mean, I guess I guess that's going on the fundamental premise that the way that businesses market themselves right now is correct. The big banks can market themselves like that because they probably spend more on marketing than any of us make. It's ridiculous what their budget is. So, I mean, why do we try and compete against them? It just doesn't make any sense to me. Even if all the brokers in Canada formed one big company, I still don't think we'd have a big enough machine to build awareness. Nope. So, and the Rob Campbell disappeared. Just gone. Anyways, I just flat out disappeared. I don't think if we put all of our resources together, we'd still be able to compete. But I don't think that's how we should. I think how we should be competing is more, being what our clients need. The goal isn't to do business with everybody. The goal is to do business with people who believe what you believe. Okay. So if we can offer a certain client expectation, I mean, for me, I like doing business with people online. I like meeting them in person, but I like the majority of the transaction happening online. So am I going to be dealing with a 55-year-old woman who is a first-time home buyer in that situation? Probably not, So it's not about trying to attract everybody to us. It's about writing the business that we want to write and people who want to be with us. The banks are good at that. They can offer, like what Conrad said before, they can offer the different services, the insurance, the everything else to their clients, and if that's what the client wants, great, let them go to the bank. But let's identify, for me, it's first-time home buyers. It's people who want their hands held a little bit, but they don't want to wait till Thursday afternoon at 2:15 to have a meeting with me. They want to be able to submit an application and make it happen. I'll get back to them the same day. But then meet for coffee Thursday at 2:15 if it's convenient for the calendar. So, anyways, I rambled.
Yeah, and that's what it is, marketing. I mean, we all have to find our niche, right? I mean, you learn that at the beginning, and I think from that. I mean, myself personally, I can't compete with the big banks. I can't compete with one, let alone five. It's impossible, right? So you have to find a way for yourself to to stand out in the market. I mean, one way that I've done it is through social media, through marketing myself online. It works for me. It's not going to work for everybody else, and that's the thing. We can't do business with everybody, and we also shouldn't want to do business with everybody either.
Yeah.
That's the big one that people have to eventually kind of learn.
No, that's a great point. Well, gentlemen, I think we probably should wrap it up. We've used up sort of our time budget today, but always a pleasure to see you. And thanks for joining us, Conrad. I hope you get your name tag sorted out for next time, and appreciate your contribution. And we'll carry this on. If anybody has any comments or questions that they'd like to see us cover on future issues of Canadian Mortgage Hangout.tv, we'd love to hear from you. Feel free to fill out the comments on our webpage or send us a tweet. And yeah, looking forward to hearing from you. We'd love to cover topics that are of interest to people. So, in the meantime, gents, enjoy the rest of your week and have a great weekend.
Thanks, guys.
Okay. That's it, guys. Thanks, Conrad. Talk to you guys soon. Thanks.
I'm just going to sit here and look at you for a while.
Yeah, what are you doing?